Thanks everyone for joining today. We're just going to wait a couple more minutes as we let people join. Great. I think we can get started as folks continue to join. Just want to check, is my screen being shared correctly and can everyone hear me?
We don't see it in presenter mode, but we can hear you, Rachel.
Okay.
There you go. Perfect.
Okay, let me just adjust. Great. So welcome everyone to the Qualifying Advanced Energy Project Credit 48C Program Informational Applicant webinar. Before we get started, I would like to note that this webinar is being recorded. As a participant, your audio and video have been turned off. If you have difficulties related to technology, for example, if you cannot hear a speaker or see the presentation slides, we recommend you exit the webinar and re-enter. Closed captions are available for this event. If you would like to view the captions, please enable them using the closed caption icon at the bottom left of your WebEx screen. And before we begin, I would like to cover a few disclaimers. So no new information other than what has been provided in the guidance will be discussed in the webinar. There are no particular advantages or disadvantages to the application evaluation process with respect to participating on the webinar today. Your participation is completely voluntary. All applicants are strongly encouraged to carefully read the IRS Notice 2023-44 and adhere to the stated submission requirements. This presentation summarizes the contents of the notice. If there are any inconsistencies between the notice and this presentation or statements from DOE or Treasury personnel, the notice is the controlling document and applicants should rely on the notice language and seek clarification by submitting a question. There will be no Q&A section of today's webinar. Please submit any programmatic questions to 48cquestions@hq.doe.gov. And I want to pause here just to confirm that you can hear me because I saw some notes in the chat that there may be some issues with audio. Okay. Great. Thank you. So today's webinar will begin with remarks from Matt Axe. Matt is acting co-director of the U.S. Treasury Climate Hub, which was established in 2021 to coordinate and elevate climate issues across the Treasury Department and to help leverage Treasury's economic and financial policymaking capabilities in support of the Biden administration's whole of government approach to addressing climate change. In his current role, Matt advises the senior leadership of the department on the overall strategy and direction of the department's climate policies, including implementation of the landmark Inflation Reduction Act. Thank you for being here today, Matt.
Great. Thank you, Rachel, for that introduction. And it's great to be here with the DOE team and to see such strong interest in this provision. If we go to the next slide, I'll sort of just give my own brief disclaimers similar to the ones Rachel gave a moment ago, but just to reiterate, this deck and my remarks are going to provide an overview of two IRS notices, Notice 2023-18 and 2023-44, along with certain Inflation Reduction Act tax provisions. And that's for general informational purposes only, and this deck or my remarks are not tax guidance. The deck and my remarks will also rely on simplifications and generalizations to convey high-level points about IRA tax provisions, but you should refer to guidance issued by the IRS for detailed information on the rules associated with those tax provisions. So if we go to the next slide, just a few high-level points at the outset. I think most here are well aware, but the Inflation Reduction Act, of course, makes the largest investment in clean energy in our nation's history, and much of that investment is delivered via tax incentives. As the federal agency responsible for administering the tax code, we at the Treasury Department are proud to be playing a central role in implementation, and I see a few of my colleagues on the line with me today. The Act includes a wide range of tax incentives for everything from household items like heat pumps and electric vehicles to massive utility-scale clean energy projects. It supports established technologies like wind and solar, as well as emerging technologies like clean hydrogen. And it invests in our full clean energy value chain so that we have robust, resilient sources of supply for the components and materials we will need. The Inflation Reduction Act also includes certain cross-cutting provisions and bonuses that apply to multiple incentives, including prevailing wage and apprenticeship standards, new credit monetization mechanisms, and bonuses for certain projects located in energy communities or in low-income communities. Next slide, please. At a high level, Treasury's work broadly falls into three areas. First, we are quickly developing and issuing tax guidance to provide clarity and certainty around how the law's tax incentives will operate in practice. Thus far, we've released more than 30 guidance documents, with much more to come. I won't try to summarize all the guidance we've released so far, but in the chat, I'll post a link to the IRS page that has everything that's available. And let me just take a moment and do that now. There you go. You should have the link in the chat. I should note that as we are developing guidance, we are working closely with our interagency partners, especially the Department of Energy, to draw on the best expertise across the government. I'll say more about this in a moment when I turn to talking about the 48C program. Second, we are working with the IRS to put in place modern, streamlined processes for taxpayers to claim the clean energy incentives. The law provided funding to modernize the IRS's systems and operations. Along with significantly improving the taxpayer experience for the better, that funding will be key to the success of the clean energy incentives. Third, Treasury is conducting stakeholder engagement and outreach to inform our approach and to educate the public about the benefits that are now available. Our team has met with hundreds of stakeholders and reviewed thousands of written comments. And as we've released tax guidance, we've done webinars like this to help translate complex tax rules into understandable terms. Next slide, please. I'll now turn to the 48C Advanced Energy Project Credit. This credit was originally established in the 2009 Recovery Act, but the Inflation Reduction Act expanded it and provided $10 billion in new funding. The Advanced Energy Project Credit aims to strengthen U.S. industrial competitiveness and energy security. It provides an investment tax credit of up to 30% that can be allocated to projects in three areas: clean energy technology manufacturing and recycling, industrial decarbonization, and critical materials processing, refining, and recycling. Importantly, of the $10 billion available, at least $4 billion must go to projects in communities located in 48CE energy community census tracts. These are census tracts where prior projects have not received prior allocations under 48C, in which a coal mine has closed after 1999, in which a coal-fired electric generating unit has been retired after 2009, or a census tract directly adjoining one or both of the above types of census tracts. If we go to the next slide, please. Since the inception of the 48C program in 2009, the Treasury Department and IRS have relied on the Department of Energy's technical expertise to administer the 48C program. DOE played a critical role partnering with the IRS and Treasury to review and recommend applications to the IRS in the 2009 and 2013 rounds of tax credits, and will be doing so again in this latest round through a robust merit review process. In general, Treasury and the IRS establish the program and issue guidance to set out the framework and guardrails. The Department of Energy runs the application process, reviews applications, and makes recommendations to the IRS regarding the acceptance or rejection of each application. Before turning it over to colleagues at DOE to describe the application process and selection criteria in more detail, I'll briefly recap the topics in the two Treasury IRS 48C notices issued in recent months. First, Notice 2023-18, and I'm just posting that link in the chat right now, issued in February, established the new 48C program under the Inflation Reduction Act. It provided basic definitions, including the definitions of qualifying advanced energy project, eligible property, placed in service, industrial facility, manufacturing facility, and recycling facility. It also discussed the prevailing wage and apprenticeship requirements for taxpayers to receive the maximum 30% investment credit available under the 48C program. 48C is one of several incentives in the Inflation Reduction Act where taxpayers are required to meet prevailing wage and apprenticeship requirements in order to receive full incentive amounts. Treasury has issued separate guidance with additional information on those requirements. Please see Notice 2022-61, published November 30, 2022. Looking ahead, Treasury expects to issue a notice of proposed rulemaking on prevailing wage and apprenticeship, which will provide further details on how taxpayers claiming 48C and other Inflation Reduction Act incentives can meet these important standards. Finally, Notice 2023-18 sets out the overall timeline and process for taxpayers applying for the 48C credit. Importantly, Notice 2023-18 established that there will be at least two allocation rounds. For the first allocation round, the Treasury Department and IRS anticipate allocating $4 billion of qualifying advanced energy project credits, with approximately $1.6 billion in credits to be allocated to projects located in 48CE energy community census tracts. So that's Notice 2023-18, and now turning to Notice 2023-44. That notice built on the first notice that was released. Notice 2023-44 was issued in May and provided clarification on several key topics, and I just posted that link in the chat as well. First, Notice 2023-44 clarified the definition of the facility for the purposes of 48C and for the 45X Advanced Manufacturing Production Credit. The 45X credit is another significant incentive to support the growth of domestic clean energy supply chains, but the Inflation Reduction Act provides that a 45X production credit is not available for eligible components produced at any facility for which a 48C investment credit is claimed. Notice 2023-44 provides definitions of Section 48C facilities and Section 45X facilities to allow taxpayers to navigate this restriction. Second, Notice 2023-44 provides clarification regarding the timing of projects placed in service. Specifically, Notice 2023-44 states that eligible property placed in service prior to being awarded a 48C allocation is not eligible to receive such an allocation. This helps ensure that the 48C program is supporting new economic activity. Third, Notice 2023-44 provides additional information regarding Section 48CE energy community census tracts. Specifically, Notice 2023-44 lists these census tracts in Appendix C. Finally, Notice 2023-44 also provides further detail on the application process and selection criteria, which you'll hear more about momentarily. In addition to these notices, I also wanted to highlight that the 48C credit is one of several in the Inflation Reduction Act where eligible entities may elect to take advantage of the new elective pay, sometimes called direct pay, and transfer mechanisms established in the law. Earlier this month, Treasury issued notices of proposed rulemaking on the elective pay and transfer mechanisms, which provide more information. I'll post that link in the chat now as well. That concludes Treasury's portion of today's webinar. Let me wrap up by just saying thanks to my colleagues at DOE for their commitment to this program and for the invaluable technical expertise they provide. And to all the prospective applicants joining us today, thanks for the work that you are doing to build America's clean energy future, and best of luck with your application.
Great. Thank you so much, Matt. We're excited to have you here. Now it is my pleasure to introduce Julia Sicardo, the Director of the Office of Manufacturing and Energy Supply Chains at the Department of Energy. Julia is responsible for awarding government investments that will strengthen and secure the nation's manufacturing capacity and develop the U.S. workforce. She administers the Defense Production Act for critical energy technologies, including batteries, hydrogen, heat pumps, solar, transmission, and zero-emission materials. Before joining the Department of Energy, Julia was a partner at McKinsey & Company and a leader of McKinsey's Green Growth service line. For over a decade, she has focused on scaling low-carbon systems and value chains across major corporations and emerging startups. Today, she'll provide an overview of the new Department of Energy Office of Manufacturing and Energy Supply Chains, which she leads. Following her remarks, we will hear from Amishi Kumar Claros, the 48C Tax Credit Program Manager at the Office of Manufacturing and Energy Supply Chains, who will just discuss the details of the latest guidance.
Thank you so much, Rachel, for kicking us off, and good afternoon, everyone. I'm pleased to be here today to join my MESC and Treasury colleagues for this webinar. Bill and IRA represent pivotal legislation aimed at renewing American infrastructure and supporting American energy security for decades to come. We are truly at a historic moment. We have more resources than ever before to help transform industries, supply chains, buildings, fleets, and the grid. The federal government is committed to developing models for sustainable change while serving the American people. This office, the Office of Manufacturing and Energy Supply Chains, or MESC for short, was established in February 2022 as a new office reporting to the Undersecretary for Infrastructure. MESC is an investment arm of the Department of Energy. We aim to support scale-up and deployment of the nation's energy manufacturing capacity for all equipment and products that are required to make the technologies that generate clean energy, transport that energy, store that energy, and decarbonize traditional energy sources while we transition. We do all of this with a focus on establishing critical domestic supply chains and increasing circularity. We make our investments alongside private sector investors via our cost-share model. We also administer some of the most significant tax credits across Bill and IRA, such as 48C, which will be the focus of our discussion today. Our investments and awards are informed by deep supply chain research, which is led by our mapping, modeling, and analysis team. Through our work, we seek to bolster both enterprises and communities to pave the way for a smooth and equitable energy transition. With the funds and authorities provided by the Bipartisan Infrastructure Law, the Inflation Reduction Act, and the Defense Production Act, MESC supports over $20 billion in programs that further these goals. Now, we are here to, as the Secretary says, deploy, deploy, deploy. This image that we are sharing here shows where the MESC portfolio fits in along the technology readiness level scale and the emerging and established technology maturity index. DOE's work truly spans across the board, from early science focused on emerging technologies to deploying more established technologies. DOE has a long history of research and development, from early stage R&D in the Office of Science and ARPA-E, all the way up through our more commercial endeavors. We feel at the DOE that R&D is not enough. We need these advances to move along the technology continuum to first demonstrations, then large-scale demonstrations, and finally at-scale deployment. This realization provided the impetus to establish the DOE's new Office of the Undersecretary for Infrastructure, which contains 3 offices, which are to the right of this chart. The Office of Clean Energy Demonstrations, or OCED, our office, MESC, and the Loan Programs Office. Our 3 offices work together as the commercial arm of the DOE, engaging directly with industry to catalyze the energy transition. Our three offices bring a spectrum of capital to the table to complement private sector investments, from demonstration stage grants through OSED to manufacturing grants, equity investments, and tax credits here at MESC, and debt financing at LPO. As the Secretary always says, deploy, deploy, deploy. And the DOE is here to be your financing partner across that scaling journey. Now to chat a little bit about 48C in particular and its history. As you know, MESC is partnered with half of the Department of Energy, the U.S. Department of Treasury, and thank you Matt for being here today, and the IRS, the Internal Revenue Service, to support the Qualifying Advanced Energy Project Credit Program, which is more colloquially known as 48C. The 48C program was established by the American Recovery and Reinvestment Act of 2009. In 2009, the first ever round of 48C credits allocated $2.3 billion to nearly 200 clean energy manufacturing projects across 43 states. A second round in 2013 awarded $150 million in credits that were not used by 2009 winners. Today, we are here to allocate over $10 billion of credits through 48C. Back in 2009, funding ranged from renewable energy technology projects such as solar components and materials to lithium-ion batteries for clean transportation and turbines for nuclear and hydropower facilities. These investments were estimated to directly generate 17,000 jobs and stimulate an additional 41,000 jobs through private investment. DOE played a critical role in partnering with the IRS and Treasury to review and recommend applications to the IRS back in 2009 and in 2013 through the rounds of tax credit review. And we will be doing so again in this latest round through a robust merit review process. Similar to previous rounds of 48C, the program will consider criteria such as commercial viability, timely project timelines, and greenhouse gas emissions impact. This latest round of review will also address current challenges, which include supply chain growth and resilience, as well as workforce and community engagement. We look forward to reviewing more of the details with you today, and I will now hand over to my colleague Amishi to take the mic.
Mishi, I believe you're on mute.
I am on mute. Thank you. Hi, everyone. My name is Mishi. Thank you guys for joining. I just wanted to take a second and just mention that I am not at my usual desk setup because of a recent ACL surgery. So my lack of being upright is no disrespect, but given the fact that it is going to be a little bit shakier for my video, I know that can be triggering and cause nausea for some. I will be going off video while delivering my slides and will come back on for the closing words, and I will try my best to speak up into the mic. All right, here we go. These slides will cover more of the details regarding the 48C, or the Qualifying Advanced Energy Project Investment Tax Credit Program. This credit program aims to strengthen U.S. industrial competitiveness and clean energy supply chains as the nation transitions to a net zero economy with the creation of high quality jobs, a reduction in industrial emissions, and an increase in domestic production of critical clean energy jobs and critical materials, especially in coal communities, by doing the following: by expanding our U.S. manufacturing capacity and quality jobs for supplying and recycling clean energy technologies, reducing greenhouse gas emissions in the American industrial base, and increasing the resilience of secure domestic supply chains for critical materials and minerals that serve as inputs for clean energy technology production. Specifically, it provides a tax to be allocated to projects in the three following categories. The categories in orange were what were in the scope defined in ARA in 2009, and the scope that was added in IRA then in 2022 are in green. So the first area is clean energy manufacturing and recycling projects that re-equip, expand, or establish industrial and manufacturing facilities for the production and now recycling or recycling of clean energy and energy efficiency technologies. The second, which was added, scope in this recent IRA bill was critical materials processing, refining, and recycling projects that re-equip, expand, or establish industrial facilities to produce, refine, or recycle critical materials. And finally, the third category is greenhouse gas emission reduction projects that re-equips industrial or manufacturing facilities to reduce greenhouse gas emissions by at least 20%. Next slide, please. My colleague Matt and Julia described some of the background already, so I'll work to not belabor previous points raised. But what I'll dive into mostly is an overview of the guidance that was released in May. So notice 2023-44. The guidance released in May explains the requirements for qualifying projects. It gives examples of products that could qualify, including the categories newly added and modified by the Inflation Reduction Act, IRA. It provides also a detailed description of the application process, including the application portal 48C exchange for round one. That will be the majority of what I discuss. It also provides a detailed description of the information and files that must be submitted and a detailed description of the criteria and policy factors DOE will use to evaluate the concept papers and applications. That's including the 4 criteria of commercial viability, greenhouse gas emissions, strengthening U.S. supply chains and domestic manufacturing for a net zero economy, and of course, workforce and community engagement. We also use the guidance to indicate priority areas for the first application round, and we'll go into detail obviously later on in the slides, and we'll also present timelines and key dates. All right, so the first appendix really covers the eligibility of projects. The first category, clean energy, manufacturing, and recycling projects, have 9 different categories listed here. Appendix A provides examples of eligible and ineligible property across all of these categories, and examples within each one of these 9. For the sake of time, I will not read all of these categories, but sorry, could we go back one slide? But I want to draw attention that these categories should be read as written. They're statutory language that we have spent a lot of time on. So, for example, for the category equipment designed to refine, electrolyze, or blend any fuel, chemical, or product which is renewable or low carbon and low emission, a qualifying advanced energy credit or a qualifying advanced energy project is a facility that produces the eligible equipment. It is not also a facility that produces the fuel or the chemical or the product. So hopefully that gives you some context on how to read Appendix A. I'll go to the next slide now. Thank you. There are 4 categories within the greenhouse gas reduction projects category. They're listed here under 1, 2, 3, and 4. Again, Appendix A provides illustrative examples of eligible and ineligible projects across all of these categories. And finally, in the final category for critical materials projects, there is just one category that is listed here. We've provided 2 links or 2 sources that you can all use for your reference. The critical materials that qualify or are eligible are listed by a DOE draft list. That link there will take you to the landing page of the DOE's critical materials page, and on the right side you will see a big box actually that says draft DOE critical materials list. You can click that and it delineates all of the materials that DOE has classified as eligible. Below that, last year, USGS listed a final list of critical materials and minerals. If you Google that, you can also readily find the delineated list. For you to be eligible, your product to be eligible under the critical materials project, your product must produce, or you must target any one of the critical materials or minerals on those 2 lists. Next slide, please. All right, so for determining eligibility, all three project categories are defined in the guidance for the scope of the eligible project. As mentioned, they provide examples of eligible projects and illustrative examples of ineligible projects. It's important for applications to indicate which advanced energy project category their project qualifies for when submitting a concept paper. It is upon the applicant themselves to determine and indicate which they believe they fall into. For example, you can have power electronics. If you're producing a component that has multiple end uses, we suggest applicants choose one category that best targets their chosen end market. And you can elaborate more in the data sheets provided, but you will be assessed on your chosen category. All right, we'll go to the next part. Thank you. So that was Appendix A. We're now shifting to Appendix B. Appendix B is really geared around what the meat of this presentation is, which is the DOE process and DOE timeline. So the overall process has two stages for the technical evaluation and the application submissions. That first stage is something called the concept paper. We are in the middle of the concept paper stage. Following the concept paper will be a 48C parentheses application. So the full application will be submitted during the second stage. Below in the table are key program dates that you can see in the guidance as well. Things that you should take a mental flag of. Concept papers are due July 31st. And allocation decisions for the whole process will be made no later than March 31st, 2024. The application portal for 48C went live alongside the notice release in May, on May 31st, to allow taxpayers to download all of the necessary application materials. I just want to repeat that again. The 48C Exchange portal is live in the sense that you can download all of the materials you need to start working on your concept papers. The 48C Exchange portal will then allow users to register and submit their complete concept papers starting no later than June 30th. So come June 30th, you will be able to register yourself as a user and subsequently start submitting your concept papers. So right now you can download everything you need from the portal website, and then come the 30th, we will enable that two-way communication in which you can register in the portal, in which you can submit your full concept paper packages. All right. Again, the final paper submission deadlines for concept papers will be July 31st. So keep that in the back of your heads. Next slide, please. Thanks. All right. So we're going to dive now into what the application process is and how we will be evaluating. So the technical review criteria and all of this information, as mentioned before, is found in the guidance. So what we will be pulling from is the guidance itself, giving you all a truncated high-level overview so you have some context when you read the actual guidance. So the first part to discuss is the technical review criteria. Eligible applications will be evaluated by DOE against these 4 technical review criteria, reflecting our major priorities. The first priority is, or criterion, is commercial viability. The second is greenhouse gas emissions impacts. The third is strengthening U.S. supply chains and domestic manufacturing for a net zero economy. Again, strengthening can encompass addressing vulnerabilities, but also opportunities. Want to make that flag there. And finally, the fourth criteria is workforce and community engagement. Workforce and community engagement is a growing priority amongst all of the administration, and you will see that there are lots of resources that are available in the nonprofit realm and also within DOE. Oftentimes there are different terms and flags that people will use when they are talking about workforce and community engagement. For example, if you are looking for materials to understand how DOE values, executes, and evaluates workforce and community engagement, you can also look for things that have the term community benefits plans. Those have pillars that are used within this guidance. Just wanted to draw your attention as applicants to that. All applicants must submit a first stage concept paper in order to submit a full second stage 48C parentheses little e application. So just going to repeat that for everybody. You need to submit that concept paper in order for you to even have the opportunity to submit a full application. So do not miss the July 31st deadline for at least round 1 applications. DOE will evaluate these concept paper submissions using category-specific technical review criteria, including whether or not the project addresses specific energy supply chain and manufacturing priority areas, as well as overarching program policy factors identified by this notice. We will spend some more time going over those in detail. In essence, the technical review criteria plus the program policy factors are all defined in the notice, and they lay out how we will do our evaluation process. Finally, in determining allocation recommendations, DOE will also consider whether the proposed projects are located in energy community census tracts, which is detailed in Appendix C. In round 1, DOE anticipates approximately 1.6 million in investment in 48C credits to energy community projects. Again, 4 billion of the 10 total is allocated or carved out for energy community census tracts. Since we are anticipating and allocating up to 4 billion, we anticipate investing or allocating 1.6 billion of that 4 into these energy communities, that 40% target. Next slide, please. Thank you, Rachel. All right, so just taking a step back, I feel like this is a very helpful slide for folks. This is an overview of how the review process will look for you all and what you will be submitting. On the left side, you have a table that encompasses the review process for the concept paper. And on the right side, you have a table that encompasses all the high-level points for a review of a full application. We will spend the majority of this time talking about all of the bullets that are within the concept paper. You will see, though, on this slide, a lot of the same steps are done for full applications. So the merit review process will be rigorous and robust on both stages, both in concept paper submissions and as well as full application submissions. High-level steps are compliance and eligibility check. So for concept papers, we're checking, are the requirements, have they been met? Is the required information submitted? Is the proposed project technically valid? Have they filled in all the mandatory requirements detailed in the notice? Then after that compliance and eligibility review, you will then move to a technical review. And we'll go over what that technical review criteria are again in further detail, but it's the commercial viability, the greenhouse gas emissions impacts, strengthening U.S. supply chains and domestic manufacturing for a net zero economy, as well as that final criteria of workforce and community engagement. After that technical review is done, the final outcome is DOE will consider program policy factors. So these are overarching, not intrinsic to any individual project. These are program policy factors we look at when selecting across a portfolio. We'll consider those in our selection, and then DOE will issue a letter to applicants either encourage or discouraging them to submit a second stage full application. And this last bullet, I just want to triple emphasize to everybody. The decision is non-binding. So that means any person that has submitted a full and complete concept paper may submit a full application, even if they received a discouragement letter. That being said, this is a very rigorous process when we are giving out our encourage and discouragement letters. And they will be doing a very similar, and we will be doing a very similar process and evaluation when it comes to the full second stage applications. On the right side, you'll see there are some additional steps while looking at the full application, such as a due diligence review. There's a note at the bottom as well. The 48C application must be consistent between the concept paper and the second stage full application. Next slide, please. All right, so I've mentioned this is something that we really want to hit during this conversation is the 48C exchange portal. All right, all applicants must register an account with the 48C exchange portal at 48c-exchange.energy.gov. If you go to that website, you will see a portal, or you will see the portal as it is live right now with the capabilities of downloading all the necessary materials to develop your concept paper application. Some of y'all might have experience with the exchange portal or a similar exchange portal if you've engaged with DOE in other programs such as ERE or ARPA-E. This is using that same framework, but it is a completely separate space. So if you have registered for an exchange username in the past or a user profile in the past, you will need to re-register come June 30th. I just want to make sure that that is abundantly clear. This is a whole new space in order for us to be working with this type of application and having US Treasury and IRS as partners. So 48C registration and submission capabilities on the portal will be enabled on June 30th. So that two-way interaction in which then you can upload or engage with the portal will be opened on the 30th. There will also be user guides uploaded to help with the registration process. Potential applications will be required to have a login.gov account to access the exchange portal. As a part of the exchange portal registration process, new users will be directed to create that login.gov account. And a note for the future, DOE intends to migrate all the 48C applications to a successor portal in the future. So this first round will be executed, concept papers and full application submissions all within the exchange portal, but in the future, we will be moving to a successor platform. And also, I will just spend some time to verbally go through the tables that you see here as well. So files that are required for the concept paper submission are delineated in the table on the left there. It is 3 distinct packages. It's your concept paper PDF. Details about what is included in the PDF is detailed in the notice and the guidance. And there's a 4-page maximum. So this is your technical narrative, and the file naming convention is under the file name column there. Your control number will be given to you when you create a user in 48C exchange portal. So you will put your control number there, a dash, and then concept paper as your file name. The next piece of the concept paper submission package will be the concept paper workforce and community engagement plan. This will be another PDF that is a single page maximum, and it will have a very similar naming convention of your control number dash CP dash WCE for workforce and community engagement. Finally, on the exchange portal, you can currently see we have data sheets listed. You as an applicant will need to determine, like you did with what project category you most closely align with. As an applicant, you will need to determine which data sheet you will need to finish and complete. That data sheet, that package, that Excel document will be uploaded as well into the exchange portal. And it has, again, a very similar naming convention of your control number that's associated with your application dash CP dash data sheet. If you look to the right, you'll see a very similar table that details out what your whole full application submission package is. You have your full narrative, your section 48C application, and that is now expanded to a 30-page maximum because we're asking for more information in the full application section. So it will have up to 30 pages in a PDF format, naming convention similar to before with your control number in front of all of your documents. You will also then submit a full application section 48CE little e application for workforce and community engagement plans. That's also a PDF. And it has a maximum of 5 pages. And there are a variety of additional and appendice files that you will need to be submitting, such as a business entity certification, your data sheet, which will also be an Excel file that will be available on the portal when full applications are open, as well as appendice files that are detailed out in the guidance. All right, I will go to next slide. So this is a breakdown of what is incorporated into all of those 3 sections of the concept paper submissions. Your concept paper, 4 pages max, needs to address those 4 sections of the guidance. Your concept paper for workforce and community engagement will need to address job creation and workforce continuity, timely project completion, bullets, as well as energy community transition and local environmental impacts. And finally, your Excel sheet will have various tabs and sheets, and you will submit details under your specific primary technology area. It is incumbent upon the applicant themselves to decide which is the correct sheet they need to fill in. Next slide, please. All right, one sec. I'm just going to take a little sip of water. All right, the next set of slides, and I realize that we're getting a little low on time. The next set of slides will go over in detail what each one of those criteria are, what we will be evaluating the meat of your proposals, your PDF documents on. I will go over them in a high level, but keep in mind, as we've stated before, this webinar is supposed to give you that context, some background, and that high level perspective. This is not a substitution for actually reading the guidance. I obviously am not objective in my opinion of the guidance. I think it's a phenomenal guidance. It's very cute. It's pretty constrained. And the way that it's laid out is the fact that we've broken it down into 3 distinct sections. So if you are a clean energy manufacturing recycling project, you can focus in on that third of Appendix B. If you are critical materials, you can focus in on that third of critical materials. And if you are a greenhouse gas emissions reductions project, you can focus in on that third. So while it's over 100 pages, the meat of it is actually only like a third of the meat could be actually applicable to you as an applicant. So it's not too long. And we did that to make things easier for you all as applicants. So hopefully that if you have hesitated to read the guidance and the notice thus far, that is the little push over to get it done after this call. So that being said, I'll dive into these 4 criteria. These are the criteria as related to the first project category, which is clean energy manufacturing and recycling. Criteria 1, as mentioned previously, is commercial viability. There are bullets in here. I won't read all of the bullets, just the first couple that address aspects of what we think are important elements of establishing a strong commercially viable project. For example, project schedule and time from certification to completion, based on readiness to proceed with the proposed project and reasonableness of the time frame required for construction and commissioning the project. That bullet means you need to adequately address that need and show to the reviewers that you do have a project schedule and time that is reasonable and can be done from construction to commissioning. Second bullet, the extent in which risk management issues and mitigation strategies are identified and addressed. That's also a very important part for commercial viability. And finally, the strength of the proposed management plan, including the management team's track record of success in areas relevant to the project and corporate health of the applicant. That is also very important for us to understand. Commercial viability is not just based on the project, but the team that is executing. The second criteria is greenhouse gas emissions. So again, I will read just the high-level bullets for you all here. I do recommend you go to the guidance. End products impacts on avoidance or reduction in anthropogenic emissions of greenhouse gases, or GHGs, need to be delineated based off the four sub-bullets that we've provided. Also, the extent to which the efficiency, lifetime, recyclability, and other characteristics that reduce overall greenhouse gas emissions of the facility's products exceed those of incumbents or competitors. So you need to make the case for your product being better and reducing greenhouse gases compared to incumbents and competitors. And finally, as an applicant, you need to address efforts to mitigate greenhouse gas emissions from the proposed manufacturing or recycling facility itself, not just the energy property being produced. Next slide, please. Finally, criterion 3, which is the second to last, it's strengthening U.S. supply chains and domestic manufacturing for a net zero economy. These are the 4 bullets that describe what we mean by when we talk about supply chains and our net zero economy. So it's the extent to which the proposed project addresses current and anticipated supply chain vulnerabilities for clean energy products that facilitate progress in line with the long-term strategy of the United States to achieve net zero emissions, the extent to which a project would increase domestic capacity and the availability of clean energy products that facilitate progress towards this net zero economy, including a qualifying energy product itself or associated components or materials, the extent to which the proposed project addresses current and anticipated supply chain vulnerabilities for clean energy products that facilitate progress towards the net zero economy based on a comparison of the production capacity and the current and anticipated gap between domestic manufacturing capacity and the demand for the specified property or materials produced by the project. And in the case of recycling projects, these technical review criteria will be based on the materials, on which materials are produced at the recycling facility, and evidence that those produced materials will serve as inputs into the clean energy supply chains. Next slide. Finally, this is the criteria for clean energy and manufacturing recycling projects. It has 4 major pillars. It's job creation and workforce continuity, ensuring timely project completion through workforce and community engagement, energy community transition, and local environmental impacts. Something to note, criteria 4 is standard across all 3 of those overarching project categories. Next slide, please. This is another very important slide that I wanted to address, and this is the priority areas that we laid out in the clean energy manufacturing space. They're all listed just in alphabetical order, and this does not affect eligibility. Eligibility is squarely defined and examples are given in Appendix A. This priority list provided in Appendix B is just a DOE's opportunity to provide priorities on what we think are high priority supply chain gaps. So there are examples listed for clean hydrogen, the electrical grid, electric heat pumps, electric vehicles, nuclear energy, solar energy, sustainable aviation fuels, as well as wind energy. Again, these do not affect eligibility. For you to apply, you just need to address what's provided in Appendix A. This Appendix B is just additional guidance in where DOE believes are priority areas for this first round of 48C allocation. All right, next slide, please. This is going over a very similar format that you've seen before, but for the greenhouse gas emission reduction concept paper packages. We'll just breeze through the next set of these slides, considering we only have 5 minutes. So again, very similar criteria, the same breakdown of commercial viability, greenhouse gas emissions, supply chain, as well as workforce and community engagement. This list here defines the details of that. Thank you, Rachel. Next slide. Similarly, we did the same kind of slide structure for concept papers for critical materials projects. This is what a submission package would look like. And the next slide will go over what the technical criteria are. And then finally, we'll settle with program policy factors. So a program policy factor is something that is not applied intrinsically to an individual project. It is used as an overarching program policy factor when we are looking at the whole suite of selections or the portfolio of projects. I will not go into details into each one of these policy factors as they are available in the guidance, but just wanted to convey that these are used in the final steps when we are making a portfolio of recommended projects for allocation. Next slide, please. All right, and just a little bit more on the recommendation process. DOE will provide a recommendation and ranking for a project only if it determines that the application meets all the requirements described in the guidance and that the project is eligible and has a reasonable expectation of commercial viability, merits a recommendation, and supports program policy factors when considered in the full portfolio. For the concept paper stage, the DOE recommendation will include all projects that are encouraged to submit a 48C application. Projects that are not included in the DOE recommendation will receive a letter of discouragement. Any applicant that receives a letter of discouragement in response can still submit a full second stage application in accordance with this guidance. The next bullet is for the 48C application stage. The DOE recommendation will include a portfolio of projects that will help achieve the goals of the overall program. This recommendation will be based on a combination of the numeric scores from the technical review, as well as the application of program policy factors. Upon receiving a denial letter from IRS, applicants can request a debriefing with DOE on the review of its 48C application. The denial letter will include instructions on how to request that debriefing. Next slide, please. All right, we are almost there. Appendix C. Matt has gone over energy communities very well, so I will not spend much more of my breath on it. But Appendix C has the consensus tracks listed by number in a nice formatted list. National Energy Technology Laboratory has also taken that list and created an interactive map that is available on our landing page, as well as you can find it on the NETL website as well. Again, we are looking at 4 billion of the 10 billion must go to qualifying projects in energy communities. So within this first round, we're looking at approximately 1.6 billion in carve out for these energy communities. We believe these energy communities have knowledge, infrastructure, and resources and know how to play a leading role in the move to a clean energy economy. And applicants can rely on that census list that's provided in Appendix C for the notice for round 1, and Appendix C will also be updated in future rounds as well. With that, I know we have a couple of minutes, and I just want to take a minute to thank you all for attending. I know there was a pretty fast go through of the slides towards the end, but these slides and the recording will be available at our landing page. In addition, these email addresses here are for you to submit questions. We aren't taking questions live as mentioned by Rachel, but we are responding to questions that are submitted to we're considering questions that are submitted to these 2 email addresses. For comments regarding non-tax aspects of this notice, you can email 48cquestions@hq.doe.gov. If there are questions about the applicant registration or submission portal or anything like that, you can email infrastructureexchangesupport@hq.doe.gov. For any tax-related questions, please refer to the notice itself for the IRS contact information. Finally, thank you all for your time. I appreciate it, and we are trying to do whatever we can to make sure we get quality applications and make quality selections. We really are excited to be a part of this pivotal tax credit program. So thank you so much.